Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining us this afternoon, we have Genjac, Vice President and Managing Director of Applied Insights at Hartford Funds, Jon Kuttin, Founder and CEO of Kuttin Wealth Management, and Nestor Vicknair, Wealth Management Advisor with VMT Wealth Management at Merrill Lynch. They join us to discuss succession planning for financial professionals as they're transitioning their businesses and also transferring of responsibilities. It is great to have everyone with us. And Julie, I want to kick it off with you. More than 109,000 financial advisors are planning to retire in the next decade. There's certainly a lot of seats to fill there.
Absolutely, Jill, and that's an exciting topic. And as part of my role here at Hartford Funds, I engage daily with financial professionals across the country, coaching them on practice management and teaming best practices. And this is one of the most frequent topics that we're discussing is succession planning. And it's really probably not a surprise given that the average age in the industry is 55 and about a fifth of financial professionals are over 65. But what's really exciting to me is that financial professionals are starting to talk about retirement a little bit more openly. If we rewind the clock about 5 years, it was a bit more of a taboo topic and we weren't talking about it as openly. And so I think that right now, thinking about succession planning, obviously it's a very complex and emotional topic. Advisors and financial professionals have spent decades building relationships with their teams and their clients. And so thinking about the process, it can be difficult, but starting the conversation many years ahead and building that plan and helping them create a process, dipping into best practices of other teams, it really is an honor to be able to bring those conversations to other advisors across the country day in and day out.
Julie, it's interesting because your job is to plan for your clients, but you said even as little as 5 years ago, no one was talking about succession planning. Is there a stigma that's attached to that? Why weren't they discussing it?
I think, it's interesting, a couple of reasons, in my opinion. One, it's an overwhelming topic. And I think oftentimes financial professionals didn't have that plan in place. And so they were afraid to begin the conversation because they didn't necessarily have that multi-generational team built out. And so they weren't sure who was going to be their successor. And so to talk about it was difficult because their clients might say, well, who will take over for me? And if they didn't have that team there, that was a tough conversation. The beauty is the advent of teams has made that conversation much smoother. And then secondarily, it can be a challenging conversation to have within the team. And so planning ahead and making sure that everyone understands what their role and responsibility will be when that leader ultimately retires makes the process so much easier. And so having that, conversation multiple years in advance, I think really helps the process. And so being able to have that clear and articulated plan and really bring the whole team into the fold well in advance and just start having those, I call them courageous conversations amongst the team. It has really helped so many teams, I think, have that discussion and again, build that roadmap for retirement and really make everyone feel like they're on the same page.
Yeah, we're going to get into that more deeply in a moment here. But Nestor, you've led a team for over 30 years at Merrill Lynch. What has your experience taught you about these types of transitions?
We think about just having your team structure put together right. We've got to have the right people on board, the right competencies, the right skill set, to have the right process in place where people know, role specific task and understand their job, what they do, to develop the right structure of having the right client facing people on board in order to make sure that you have the capacity to articulate your messaging about a transition and what might come, what steps are next, to have a culture that can sustain beyond the leader, to think about having a culture where people are proud to be associated with the team and engaged with the clients. And so having that structure that you have the right people, the right culture, the right process, and to have the right kind of role specific tasks well laid out. Really, if you think about it, that's just how you would run a business anyway. A well-run business that creates capacity for growth, and that capacity would then allow the business to sustain itself beyond the founder is the right way to start to prepare for a transition ahead of time. And if we think about the earlier comments of why this is starting to get more popular now, is that one, the businesses have grown to be a lot bigger and they're a lot more important, and the firms themselves have recognized the fact that this isn't just a broker and a secretary. These are wealth management advisors with large organizations. The revenue streams have gotten bigger, and the firms themselves are leaning in to saying, hey, we need to sustain these business beyond these founders and advisors, and they're assisting with new roles and responsibilities to help build that structure to make sure we have the right people aligned, and our communication pattern is such that we're talking to the employees or staff members of the team, and we're also talking to the clients so that we can create an outline of how we're going to sustain the team.
Mm-hmm. And Julie, let's get back into how far in advance you should be thinking about succession planning. You note here transfer of assets is one thing, but transfer of trust takes time. I think that's an important soundbite.
Absolutely. And I always say that, transfer of trust doesn't happen in one conversation or one handshake, right? We don't trust someone after saying one introduction. So my guidance is typically at least 2 years in advance to have those introductory conversations with clients so that there can be multiple meetings, multiple conversations, a mix of in-person and virtual interaction. Right? We can really build a relationship. We can get to know each other on a business and a personal level and, really forge that relationship. And I think that, have meaningful interactions is what I like to call them, right? It's not just a phone call to ask for a statement or to ask for something transactional, but it's to really build those conversations, get into the emotional side of things. And that just takes time. And so at least 2 years is really, I think, the sweet spot, if not more. If we can have more, that's great. And again, like we started with, the building out of our multi-generational teams and having that cross-generational, cross-team interaction really helps with this so that clients have that exposure to team members for many, many years. But I think that comfort level and giving credibility to our team members is also so important. Making sure that each team member has a purpose in those meetings. How are we introducing them? Why is that team member there? What is their area of expertise? So that clients understand the value they're bringing to the table from day one. I think that is also so crucial in this transfer of trust process, and making sure that the ultimate handoff just goes as smoothly as possible.
Yeah. And Jon, what are your thoughts around a formal succession plan?
Yeah, Jill, well said, both by Nestor and by Julie. I think, when you think about the industry in general, advisors, we're getting older, right? So we are all getting older, and it's on our clients' minds as to who is going to actually take care of my financial planning and wealth management once we retire, right? It's easy to see. We've got some gray hair, in my case, no hair. So in my opinion, there's really two pieces there, Jill. The first is we should all have a catastrophic plan in place from the death, disability perspective, just to ensure that if anything were to happen to you as an advisor, that your clients are left in good hands. Secondly, the reality of the situation is either it's someone on your team today or several folks on your team today, that second gen or that next gen advisor, having a system in place so that he or she is actually being integrated into the process from a teaming perspective. And ultimately, from a timing perspective, we found, as Julie said, at least 2 years, if not 3, 4, even 5 years, the longer the better, because ultimately these are relationships that we have with clients that are based on years of trust. And we've gone through a lot, right, with our clients. And I think it's really important that it's a phased in approach. One of the things, Jill, that we've always focused on is making sure that as it happens systematically, the next gen advisor has a real role in the client relationship process. And over a couple of year period of time, it might go from running 10 or 15% of the meeting in that first interaction. And then as time goes on, 20 to 30, 30 to 40, so on, et cetera. So when it's time to exit stage left, the client is very comfortable with that next gen advisor.
Yeah.
I was thinking another way to think about that and adding on there is you talked about catastrophic. It's like, well, somewhat of a stress test as well. Because I like to think of it this way, that if you can leave a business for 1 week and it starts to fall apart, you are the business. If you leave a month and it starts to fall apart, you're running a good business. If you can leave for 6 months before the business starts to fall apart, then you own a business. And to me, in our positions, I mean, that just means capacity. That means the ability to be able to continue to grow. But that also means that you've developed a system and process around you, the structure of people, that it's a sustainable business beyond the founder or the key parties. Now we're all agreeing on our 2-year communication, and I had the opportunity to sort of stress test our own team a couple of years back when we had a critical member retire, and many clients were tied to her and her engagement with them on a daily basis. And they were like, man, how are you ever going to replace her? Your team's going to fall apart. What are you going to do? We started 2 years in advance and hired their replacement well in advance so that they were up and running at speed that the clients would depend on and trust because of the knowledge base they gained in the 2 years. And then so staff understood. And then a year out, we started to communicate with clients that in the last 6 months of her being present on the team, she had nothing to do. And everything was running as smoothly as possible, but she was still there to assist in the case needed, and the transitions come off beautifully. So I think of it that way, as building the structure up front to be able to withstand and stress test, but also have that evolution plan that the people are in place. We understand what they do, and they're already starting to engage, and the clients are starting to say, okay, I figured this out. I know what's going to happen here. I get it. And they become comfortable with it. It's a seamless transition.
Yeah, and this is a perfect segue, Julie, to bring up this conversation. How do you communicate this to a client? I mean, this is a delicate conversation.
Yeah, absolutely. I think first and foremost, working internally within the team. And I always like to say, having a bit of role play, practicing, scripting on this, I think is really important. I think that's an underutilized tool in our industry, just in general. But really taking time to work through it with the team. What will everyone say? What's the consistent messaging? How does everyone have buy-in? Does everyone understand their role? And again, this isn't 30 days in advance of the retirement. This is well in advance. But how do we envision this unfolding? What is the consistent brand? What is the consistent message that everyone is articulating? I always say that if a client calls in and speaks to the retiring advisor or speaks to the client associate or speaks to another advisor on the team, they should hear a very consistent message. They shouldn't hear 3 different retirement messages. So just making sure that there's some streamlined communication within the team, I think, is really important. Making sure each team member understands their role in the transition for retention of talent. So there also is that consistent base for clients ultimately when the retiring advisor does ultimately depart. And then I also think that there's the opportunity, depending on client by client, there may be delivering of the message that's a little bit tailored. You know, some clients, it might be an in-person meeting. It might be taking them to dinner. It might be inviting them into the office. Others, it might be a phone call because they're at a different state or point in the relationship. Others, maybe because they're, busy or at a different type of relationship, maybe it could be an email or a letter. You know your clients and how they might, digest the information. But I think going through that and creating that tailored plan is really important. It's not necessarily a one-size-fits-all delivery. And so working with the team, taking the time to create that internal messaging and then going through the client list and having that tailored approach, I think is really, I know it's time consuming, but in the end, teams have shared with me that it really pays off from a retention standpoint.
Yeah,
Jon,
Julie,
I'm sorry, go ahead.
I was just going to add, super well said. And, a couple of the key points that I would highlight as well is a combination of consistency, as you hit. I think it's really important because I've seen transition plans and succession plans where not all of the constituents were on the same page. But it's about transparency. I think, Nestor, you did a great job a little while ago of talking about the clients know, they understand that one day you are going to retire. And I look at it, I've been involved in dozens of succession plans on the acquirer side or the merger side. And ultimately, it's usually the advisor's one and only time to actually succeed their business and to have these conversations. So quite frankly, it's their one and only at bat. So as an advisor, if you are part of the succession and ultimately going to be serving those clients, being able to lead the retiring advisor and help he or she with their scripting and how to actually position this transparently to clients will lead to a much better client experience and transition process. And at the end of the day, what this is about is making sure that the employees of the firm that you're acquiring, as well as the clients of the firm that you're acquiring, have a seamless experience. And hopefully they all feel like they actually were handed up, not down.
Right. And Nestor, let's spend some time the last 4 minutes here in identifying talent needs and hiring strategically. The common theme is, I mean, you could go to as many classes and get as many designations as you can, but it all comes down to, it's a people-to-people business, right? And it's not a one-size-fits-all solution, as Julie had mentioned. So when you're looking for the next-gen advisor, what attributes, what are you looking for to ensure that this transition is handled successfully?
So we certainly need somebody who's competent, somebody who's smart enough to understand the financial markets and be able to articulate an investment message, to go through some planning. I look for people with personality traits that are going to be a bit more expressive, a little more outgoing, and being able to make decisions. So they're going to be a little bit more, as I'd say, direct, but also would be expressive enough to engage. I think that being able to market and to present. And I mean, clients want to do business with people that they believe, like, and trust. And that's part of the reason why you start with the 2 years. I want somebody also that we're going to be able to bring them out face-to-face meetings. They're going to be able to do a great job representing themselves and give the confidence to the client that they're going to be okay as things move on. Because at the end of the day, the financial markets are going to do their thing. The investments are going to do the asset. Things are going to continue on, right? But they have to have that trust, believe you, they like you, they're going to trust you, they're going to be engaged. And I think that's mostly a face-to-face thing. I've tried it over conference call, didn't get good results at all, right? We do it over Zoom. It's a little bit better, but there's nothing like a face-to-face meeting to get that chemistry together with clients for them to understand who they're dealing with. And to get that trust and confidence together with them. So we're looking for people that are going to be expressive, outgoing, competent, smart enough to articulate the message from a sales or marketing standpoint, but also be able to have the believability, likability, and trust for the clients to believe in.
Right. And Julie, as teams are getting bigger, right, the roles are going to expand and evolve as well. So it's not necessarily just looking for a financial planner, but you're also going to need people from an operational and compliance and administrative perspective to be able to manage these teams as well.
Absolutely. And I always say, as a financial advisor retires, it may not be necessarily a financial advisor role that you're looking to replace them with. It may be, but it may not be. To your point, Jill, it might be a completely different skill set. It might be someone with a marketing or technology background, or someone with more of a COO or a team management type of a background that really is the type of person that's going to get the team to the next level or the next phase. And so I always like to say that this is a turning point for the team. Take a moment to really assess all of the skill sets on the team and what gaps exist. What do you need to fill? If it is another advisor, what are those skills and sets of capacities that you're looking to fill? Because it is such a perfect opportunity to bring in whatever that new set of skills, as Nestor mentioned. But I think it's just such a perfect opportunity to hit the pause button, even for a moment, and just make sure you're doing that total assessment of the team to make sure that it's really your team of the future.
Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.